Welcome back to Small Caps, ladies and gentlemen, and it's the fortnightly catch-up with Truth Bomb Tony. My name is Kerry Stevenson. We get a lot of feedback saying that you enjoy our banter, but you also enjoy the information that we squeeze out of Tony every fortnight. This will not be our last conversation before Christmas. We're going to do one more. And when we do the next one, we'll go more stock-specific, I guess, like a Santa stocking. Giving you some ideas of what Tony's looking at in the current market. But today, well, it was actually yesterday, the RBA, once again, eight in a row, 25 basis points up. Some people feeling a bit of pain. The market's a little bit off. Gold's starting to show a little bit of momentum, as is silver. But the man with all the knowledge, it's Tony Locantro. Tony, Truth Bomb, how you doing?
I'm going okay. To be honest, Kerry, not my best year for our stocks. It's been just a brutal sell-off, and a lot of them are limping into the new year. So it's certainly been tough on a number of fronts. Obviously, some sectors have enjoyed some outperformance, but yeah, you've got to be hopeful that the market is going to eventually revert back to fundamentals. And it doesn't matter what a lot of our companies put out, they've never got the recognition. And it's all about banking the good news for next year, which we'll cover in our last show.
Well, ladies and gentlemen, I want you all to put a little nice comment below about Tony, because he seems a little flat today, don't you think, ladies and gentlemen? As we come into the end of 2022, he's normally much more robust than this. So pop a comment in the chat box below. Give him show him a little bit of love. He's come on every fortnight, given us his all. Tony, I know it's been a tough year, but do we see signs of spring, or is this market still just doesn't know what the hell it's doing? I mean, that rate hike of, it was 25 basis points. So it wasn't 50, it wasn't 75, but it seems like that might have been the straw that potentially can break the camel's back, especially with a lot of these interest rates coming off their fixed rate terms. Feels like people might be starting to worry a little bit.
Oh, understandable. And we're still going to have the flood of stock on the property market. The forecasts, again, are quite dire. So, we're going to see volumes increase. Certainly, the fixed rate cliff, it's looking ugly. So I think on the economic front, even though we've still got 25 basis points, I still think there's a lot to get through, and we're certainly nowhere near the end of it. So you've got to be mindful of what's ahead. And on that front, Kerry, I don't see too much in the way of anything to really look forward to unless you're in a good position. So I don't think I'm flat. I just think that sometimes you've got to be a little bit of a realist. But she's not looking good for next year, and we've got to focus really on each company delivering their milestones, getting on with what they set out to do. But let's see how we go early in the first few months of the year. The RBA doesn't meet in January, so there will be some respite till February. Let's hope it's not a double in February. We really need inflation to cool further. So a bit of a relief rally on the US market. So that has recovered. Our market, certainly the largest stocks, have been more stable. But is this the calm before the storm? We'll soon find out.
It's interesting though, Tony, because I look at it and I think, the market overall, if you look at the market, like all the indices and all the different sectors, if you like, I think that some are going to do extraordinarily well. Now, maybe next year might be a little bit tough, but if we look at what governments around the world are doing, which is you're all going to have to be ESG compliant, you're all going to have to be looking at how we're going to get into this green revolution. Well, that takes commodities. of all different types, the coppers and the cobalts and the nickels and the vanadiums and all sorts of things. And the stock levels across the board with LME are probably at their lowest in decades. To me, that smells like we could have a moment where it all pulls back, but the race could be on, because it doesn't make sense to me that we need a lot of commodities, but it's trading a little bit sideways at the moment.
Longer term, it looks fantastic. And going into next year, copper is certainly one of my top commodities in terms of this green revolution. There's going to have to be a lot more copper mines brought into production. And there's quite a few alarming graphs that the amount of copper we're going to need with electronic vehicles and other aspects of that revolution. I think I'd call them electronic vehicles. Electric, of course.
Electronic,
that's
EVs.
yeah.
Everybody knows what it is. It's an electronic vehicle powered by coal.
Oh, God. But I certainly agree. But these commodity prices can trade sideways. The copper juniors have just been decimated this year. I don't know what more they can do. But it's a longer-term trend, and you're always going to get that volatility, new mines. You might see, obviously, BHP with that revised offer for Oz Minerals at 28.25. We saw AIC mines get over 90% of Demetallica. I think there could be a lot more corporate activity in the copper juniors. So that's another thing we can discuss in a couple of weeks.
Well, I also think the other one is, I was talking to Andrew Monkton from Kin Mining. I was down at the Resources Rising Stars Reed Corporate put on, which, by the way, a lot of people there, a lot of chat, some really good presentations. Again, we won't be specific tonight. We'll do that in a couple of weeks. But where was I going with this? I just think that you just have a look at the market and the field. There's still people that are quite interested in what's going on in this market.
Absolutely. And the best way to meet management is to go to conferences, to get some ideas. I know there's been a lot of these conferences, and there's, it's like a swimsuit parade, as I always say. But there's always going to be opportunities. And I'm just looking forward to watching the fundamentals evolve, seeing where if these copper juniors can get off the canvas, looking at other commodities. Can the lithium stocks continue? There's been quite a bit of bad news about that. Let's hope that some of these commodities and the investors don't have a similar year to what's transpired in the biotechs that have just been absolutely poleaxed pretty much the entire 2022. So I think it's going to get back to individual stocks. We've had a lot of project acquisitions in rare earths and lithium. Can the market maintain that enthusiasm? We'll see. But hopefully, once it reverts back to fundamentals, the quality juniors always tend to bounce back and get some attention. But there's still the odd trading frenzy. But it just feels as though a lot of speculators out there have had a complete gutful of this year and looking forward to a bit of a break.
I had a senior moment before. What I was going to say to you was, down at that conference, I had a chat with Andrew Monkton from Kin Mining, and that area over in Western Australia where you've got Kin and Genesis and Red 5, there's talk of consolidation in that area, which would make it probably the third, if they all get together and be sensible, could make it the third largest gold producer in Australia, behind, I think, Northern Star and I think Newcrest, if they get it all together. And there's talk of that happening. Have you heard anything about that?
No, it's always good to get a first from you, Kerry. I mean, consolidation is a great thing, but again, you've always got egos in the industry and everyone thinks that their company's worth more. Obviously, there's going to be some synergies. and we might see some of the smaller golds get together and create a mid-tier in the sector. So you look back 10 years, and that's where the Evolutions and other companies, and even Northern Star, were put together by corporate activity and some exploration success. So, yeah, there's a lot to look forward to. M&A in the gold sector. Obviously, the Australian gold price is doing fantastically well at 2,633 last I looked. So these companies, and get their production costs under control, are going to be doing exceptionally well, and no doubt looking for other companies rather than having to go through the process of discovery through to production.
Yeah, it's interesting, isn't it? Because a lot of the times, everyone knows I'm that gold lady, the gold bug, whatever. People often look at the gold price, and I'm saying, stop looking at the US dollar gold price, and you got to start looking at it in Aussie dollar terms. And when you've got an all-in sustaining cost of people pulling the dirt out and releasing the gold, and that cost is about anywhere from $1,200 to $1,500, you're talking over $1,000 per ounce of gold out of the ground. They're screaming cash out. I'm just wondering what your view is on, I guess, the share price of a number of these companies that are actually in production that their share prices haven't really moved that much. Do you think that's just a lag effect from people not paying attention to gold in the last, feels like years?
Oh, for sure. And if you look at one aspect that's really hit the gold industry and every mining industry has been inflation. Just the labour costs, the costs of running the operations. No doubt it'd be a pretty grim time to put out a definitive feasibility study in the current environment. But there hasn't been a lot of hype surrounding the gold sector. The US price, well, you said not to look at it. It's 1,768. It did at one point looked as though it wanted to go a lot lower. We briefly went back over 1,800. But again, it's going to be interesting to see the forecasts for next year and whether or not that hot money is going to flow towards gold and the gold juniors. Remembering that probably the greatest bubble that we would have saw, even though we weren't investing, was probably 1978 to 1980. And that's when the whole sector went nuts. But in between, we've had some amazing gold discoveries and companies getting through to production. You've had Bill Beament build Northern Star from around a cent into $15 and change. So I just think the growth is certainly going to be there. But where's the hot money going to go? Is it going to head back towards gold and silver? There's plenty of chat about it. The silver price, as you mentioned, has done exceptionally well, but there aren't many silver juniors on the ASX. And look, I look back to the uranium bubble of 2005. There was only a couple of companies. Then suddenly there's a rush of uranium companies. I'd expect the same for silver. But
it's interesting. Tony, sorry to interrupt you. And I know we're not meant to be talking specific stocks, but I am going to mention one, which was E2 Metals, which is run by Todd Williams, because they've just made an acquisition over there in Argentina, which means that they've got a very large silver deposit, which they can bring pretty swiftly. I think it's allowed them to create a lot more value. And that comes back to your comment before about that sort of M&A activity. But it was an interesting transaction. I think it was Austral Gold are now going to have 19.9% of E2 Metals, but it makes it a much more interesting company and a lot more value for shareholders going forward. The reason I mentioned that is because we're talking silver and some of this consolidation and M&A activity happening. I think it's already starting to happen, and it will be interesting. But those that I think that are well set now will be the ones that will benefit their shareholders in the future.
Yeah, we have to look back to about 2011 when we had the silver price. I think it got up to about $48 an ounce, and that didn't last very long. So any reasonable acquisition, they can add it now to the silver company list. But as with any speculative bubble, it's hard to feel it when you're not in it. So, certainly going to take some time, but there will be speculators will start looking for any silver company. They'll start to value them on resources in the ground. So, yeah, good old-fashioned silver bubble would certainly be welcome. I've got my main stock, which we'll obviously cover in a couple of weeks for viewers.
He's got a stock for you for next 2 weeks. You're going to have to be patient for 2 weeks. We're making it like a Christmas present, ladies and gentlemen. It'll be out on the 21st, I think about the 21st of December. So just in time for Christmas is what we'll say. Tony, just want to, before we finish up, I wanted to touch on inflation, stagflation, deflation, etc. Why we've got to where we're at and what you see. Is this, I've got a view that inflation's here and it's very sticky. I'd love to hear what your views are.
I couldn't agree more. Being sticky, how the hell is the RBA going to get back to that 2 to 3% target, that target band in a hurry? We've got, even though US inflation has cooled somewhat, I certainly think it's going to be a major problem. And inflation is far worse than rising interest rates. It just has such a detrimental effect on the economy. So I just think that obviously the RBA has gone the quarter 25 basis points, but I still think they're going to have to tame the inflation beast next year. And if the percentage of inflation doesn't get down towards that RBA target, I think we've got more rate rises. And really, that's the only tool to effectively control inflation, which could point to an ugly situation. And you don't want to go through stagflation, last seen in the 70s, which basically means it's an inflationary recession. And I have a saying, it's like being sandpapered to death on an economic basis. So certainly we don't want to see stagflation. We want to see inflation brought under control, but we don't want to see mortgage rates get too out of control, and we don't want to see consumer sentiment and spending collapse. So it's going to be a fine balancing act in 2023.
I think what we're seeing as well is what we call the lag effect, Tony, where companies are actually starting to feel the pinch of inflation and some challenges ahead. And so workforces are starting to shrink. And although right now, as I'm speaking to you, the unemployment rates are probably the lowest that we've seen in something like 40 years. That's the lag. In other words, that's kind of looking backwards. And if we look forward, I suspect unemployment is going to start to increase. And therefore, I hate to say it, I'm thinking more of a stagflationary type environment. I think inflation's sticky, but I'm just wondering whether we will be sandpapered to death. Because if you look forward, those economic challenges are starting to bite a number of companies. Now, by the way, ladies and gentlemen, this is not all doom and gloom. I want you all to say, out of every crisis comes opportunity. Repeat that to yourself 100 times a day, because you can sit there, put your head in their hands and say, oh my gosh, I don't know what to do, and do nothing, which is not what we want you to do. We want you to get educated. We want you to listen to Tony. But there are always opportunities when things are looking dire. And if you do your homework and you understand things like the Green Revolution and things like excess, as Tony said a moment ago, the amount of copper that we are going to need to fulfill what all governments around the world want to do, which is we're all going to go to net zero. Aren't we, Tony? We're going to net zero.
Well, apparently. And I'm just listening to what you were saying about doomsday. The RBA kept rates at 0.1 because they were preparing for 15% unemployment. So
right,
that's where they and they actually apologised for their 2024 statement. So that would be probably the worst economic scenario of all time, or at least certainly of our generation. So you don't want to see employment march up with rampant inflation. So Look, I'm just going to stick to small caps, look at growth companies, share price weakness and a lack of recognition, I think has set up some amazing opportunities, but it's always hard to get enthusiastic when others are lethargic, and share prices now are going through many capitulation. And it's probably going to get worse leading into Christmas when they're trimmed to raise some capital. So an interesting year, a challenging year, but I'll come back in a couple of weeks, Kerry, with some enthusiasm and gusto, and I'll run through some stocks to watch.
There you go, ladies and gentlemen. So show him some love down below in the comment section. But for now, there are opportunities out there. We don't have time to cover them today. So check back in a couple of weeks here on smallcaps.com.au, well, the Small Caps YouTube channel, I should say, at Small Caps TV. And we will make sure that we cover a number of stocks, not just in resources. Tony, tell me what are we going to cover? Resources, biotech, anything specific?
I think let's look at base metals, let's look at precious metals, and let's look at some biotech companies. They're going to be embarking on some exciting clinical trials that could hopefully provide shareholder returns and enhance lives. That's the main thing.
Well, there you go, ladies and gentlemen. Be cautious out there. Come back in a couple of weeks' time to be specific on stocks. But as always, do your own research, call up the companies, ask the questions yourself, and don't just listen to what Tony and I are saying, because it is so important that you are really ahead of the game by being informed and listening, but also checking out for yourself what the companies are doing. In the meantime, Tony Locantro from Alto Capital, Truth Bomb Tony, as always. Thanks for joining me on Small Caps today.
Look forward to our next show. Thank you.